Hi, hello everyone. Welcome back to my channel. This is Emil. This channel I mostly talk about investing and investing in the stock market. So in today's video, I want to talk about Spotify stock. So first, I'll just talk about why I wanted to look at Spotify in the first place. Then I'll move through all the different growth factors moving forward for Spotify and the financials, what its situation is like. And then at the end, I'll let you know whether I think Spotify is worth investing in or whether after researching it, I think it's not a good investment. Cool. All right, so let's get straight into it. Yeah, so at the moment, all stocks have been absolutely hammered by the coronavirus. Well, maybe not stocks that are selling face masks or hand sanitizer, but yeah, pretty much every stock across the board is down. So what I'm kind of saying in this first point here is that buying a risky asset now, like now, most people are buying safe assets at the moment, or safe stocks at the moment, like high dividend stocks. But if you really want to maximize your return, in my opinion, buying the ones that everyone's selling, that's yeah, it might dip a lot more than the safe stocks in the short term, in the long term, because they've already dipped the most. They've already crashed harder than the dividend stocks. Then that's why they're better buys than the safer stocks right now, in my opinion, if you're looking out for the long term. Um, so it's always about trying to be a contrarian and do what other people aren't doing or thinking to do. So yeah, Spotify is a Swedish company. Its headquarters in Stockholm. So that is kind of a good and a bad thing for me. Like pretty much all my stocks are US based. So I was interested in this one because it's a European stock. Um, but at the same time, sometimes it's better to have. It's not in Silicon Valley, which is where all the best engineers in the world usually are. Its headquarters in Stockholm. So yeah, just everything going forward is in nominated in euro because it's a European stock. So yeah, the revenue for 2019 was 6.7 billion, and the market cap at the moment is 21 billion. So still, even though it's been knocked down quite a bit, still pretty high price to sales ratio, and they're making a net loss of 186 million. So that was for the year 2019. Although they did post a Q4 in 2019 was their second profitable quarter. So they do have the capability of being profitable. The last profitable quarter was Q4 in 2018, I think. So yeah, I think Spotify. I'm not really sure when they're planning on being profitable, but kind of they're not too worried at the moment. They're all about growth still. So yeah, in a few years, eventually they're at the moment they're just looking for market share and getting more and more subscribers on board. So they have 274 million monthly active users, almost half of which are paying, and 70% of their revenue from both ads and premium subscribers is given to the licensors of the music, so like the artists and the record labels. So I'll just show you about the growth of these. Yeah, the 274 million active users. Yeah, so that was a 29% growth year over year. Sorry, for the premium had a 29% growth. Total growth was a 31%. So the free users grew more than the premium, but that's fine. The more basically Spotify's main aim is to convert free users into premium users, which is how I came onto Spotify. I started out as a free user, eventually got the premium, and then I tried out YouTube Music, but I went back to Spotify. I thought it was better. So yeah, that's basically their funnel to get people on board. So they have a few different tiers now. So they have the free version, they have the family Spotify, which so that has brought on more subscribers. Those two different tiers, although it has reduced the average revenue per user. So overall, it's an increase in the amount of revenue they're generating, but the per customer or per user dollar amount that they're getting is decreased because of these different tiers. So yeah, I had a look at their balance sheet. It's actually surprisingly good considering they're an unprofitable company. I would have expected them to have a lot more debt than cash on their balance sheet, and because they're not making any money. But it was actually 1 to 1, which is good to see. Um, yeah, and I the reason I like Spotify was because the algorithms were better. So if I click next song on Spotify, it should always suggest a song that I liked. Whereas the YouTube was okay, but not quite as good. And the reason being, Spotify has had longer developing good algorithms than YouTube has for music. And so YouTube's algorithms for video watching is really, really good, but maybe not so good for actual music, for finding music. Um, Maybe I'll just talk about their competitors for a minute. So yeah, they have three main competitors that I I think of. YouTube Music is one I've used. So yeah, YouTube Music, I tried it. It was pretty good. I liked it because when I used YouTube, I used to use YouTube before YouTube Music to listen to music. So I'd have all my videos and all my playlists on YouTube with all the songs I liked. And once I got YouTube Music, I could just straight away download them all and have them all those playlists that I've already made. And YouTube, another advantage for YouTube is they have a crazy big library of like any song that you want. There's always a video for, like, you can find any song on YouTube, but maybe not on Spotify. Like more obscure songs might not be on Spotify. Apple Music has the advantage that it's already on every single iPhone, and yeah, it's integrated with iTunes, and you have the Apple Podcasts, which are also really popular. Amazon Music has the advantage of being um, integrated with Alexa. So when you say play this to Alexa, Alexa, when you've just set it up, will want to do it via Amazon Music. But then it's a little tricky, but well, it's not really tricky at all. But you have to physically connect your Spotify in the app to connect it to your Alexa if you want to play Spotify music. All right, let's go back. Okay, let's move on to the growth factors. Tencent Music. This is China's Spotify. And yeah, so Spotify just bought 46% of them at the moment. Um, so I mentioned that. Sorry if my dog's making noise. I mentioned that Spotify had their second profitable quarter in Q4 2019, and they spent all this extra money on trying to really push their podcasts. Yeah, I think everyone realizes that podcasts are getting really, really popular at the moment. So Spotify want to really make that part of their user experience, have all the best podcasts on there. So I was just saying that Spotify has the most partnerships out of any of the competition. Yeah, these are all pretty standard things. You can connect to Spotify through all these different ways, so it's pretty easy now. Spotify is mostly popular in Europe, so for my European subscribers, um, I don't know how big it is in America. I'm not sure if Apple Music is bigger, but in Ireland anyway, everyone has Spotify. So I think it's pretty popular in Europe for sure. They're trying to extend to the Latin American market and really move into other parts of the world like Australia and yeah, second and third world countries. But in those countries, they're gonna have cheaper pricing because obviously people aren't gonna be willing to spend so much money. Uh, cool. I think that's everything for that. Yeah, I just mentioned that the monthly active users are growing exponentially. So you can see 29% growth there and a 30% in 2017 to 2018 and a 31% growth in 2018 to 2019. So we'll see it. We'll see how it goes in the future. Yeah, so they have two different revenue sources: ad revenue and subscriber revenue. Ad revenue makes up about 10% of their revenue. So really what I mentioned before, like they want to get people off the ad platform and onto the premium because it's much less hassle as well. Like it's much easier to just collect €10 a month from everyone rather than trying to work with advertisers and like with advertising as well, you need to have data about your customers. Like Facebook have data about you or Google have data about you, so you can target specific ads. So Spotify have to really step up their game in that sense if they want to make money in that realm of the realm. And yeah, so if they can target ads and make, like if I hear an ad about something that I'm interested in, more likely to click into the ad and buy something, which then means I can, if I'm a advertiser, I'll be willing to spend more money. Um, yeah, that's what I mentioned before. Uh, yeah, there's other ways to pay in other countries, like maybe not every month, or you can pay for 3 months, or you can pay per, you can just pay for select artists, but that really isn't really a huge amount of their revenue. So yeah, here you can see it's about, this is the ad supported revenue. It's just over maybe like 12.5% of the total revenue, and both sources are increasing pretty nicely. Like 29% growth. That's big. That's big growth. Um, yeah. So Spotify isn't all perfect at all. Um, yeah, it's a difficult market. It's really it's a huge disruptor um, to the previous way of listening to music, where you had to buy and download a song and keep it forever, like, or even before that with CDs and everything. So yeah, it is a disruptor, but it's quite getting quite old now. There's really high royalty charges. As I mentioned, they pay about 70% of their revenue goes to the artist. So, or the label. And as mentioned there as well, that Apple and Amazon, they have so much money, so they're happy to operate at a loss or at a break even for as long as it takes. Spotify has to continue to rely on more capital, so it's not great, the competition in that sense, because they're such behemoths. Amazon and Apple, like, that's who you're up against. Not a great. Yeah, so Apple and Spotify do not get on. Spotify are always complaining to European uh, governments or whatever, people in charge, about Apple. So basically, Spotify asked their customers to download Spotify via their website instead of the App Store. So then Spotify would get the 100% of the income rather than the 30% fee. And then Apple, yeah, rejected software updates for Spotify in the App Store. And Apple and Spotify are always kind of niggling, doing kind of backstabbing to each other. Um, yeah, Apple are always kind of doing little snaky things to make make people not use Spotify, and then Spotify are always complaining that Apple aren't promoting fair competition by not like promoting Spotify in the App Store. And then likewise, Spotify, if someone signs to Apple Music, if say like Drake signed to Apple Music, so for example, uh, Spotify would then bury artists who have signed to Apple Music and Spotify and make them less, you know, popular. So they're kind of both back and forth doing things. So Spotify are just as bad as Apple, and Apple are just as bad as Spotify. So yeah, so there's Apple Music and Spotify, and currently at the moment, Spotify is the Coca Cola and Apple is the Pepsi. There is a few other ones, but they're they're not so challenging to Spotify at the moment. So yeah, it's always good to be the market leader. Spotify is still the market leader. They do have some stiff competition, and I think they need to, you know, they're complaining about their competition a lot and filing lawsuits. I suppose that's probably the right thing to do, but yeah, so Spotify really depend on, like, they don't produce their own music, they depend on other people to allow them to use their music. and so it's quite a complicated. All these royalties and everything, it gets very complicated and kind of risky if you get sued or whatever. And then there's fake streams, so like certain artists will like get bots to stream their songs, so they get more money from Spotify. Spotify have this under control at the moment. So lastly, I'll just uh, give my opinion on whether I will be buying Spotify. For me, after looking through Spotify, it's not a absolute screaming buy to me at the moment, so I won't be buying it myself. They're they haven't. I think there's better opportunities in the market right now, particularly with the coronavirus. Spotify hasn't been hit as hard as you might expect. I suppose people are still going to be paying their revenue anyway through the stock market, or sorry, still going to be paying their subscription charges probably. Like some people will cancel, so there's a bit of a drop, but it's not like everyone's going to stop using Spotify in comparison to like everyone's going to stop getting cruises or stop getting flights because like yeah, they actually can't go on those, so it's not going to be hit that hard. So I think there's better opportunities at the moment. And yeah, I really like Spotify user as a user, but there's just not enough going for me right now. I know they're about to become profitable maybe, but yeah, it's not attractive enough to me to buy at the moment. um so yeah, that's all I wanted to say. Let me know what you think about Spotify yourself, if you think it's worth a buy or whether you think it'll be a good buy in the future. It's not a complete no for me. If it drops, I'll go a bit lower. I'll definitely be interested. If it gets to a price to sales around one, then I'll start to be interested. That would be like a 60%, 70% correction. So probably won't happen. Yeah, so thanks a million for watching. I hope you enjoyed the video. Drop me a like if you enjoyed the video and subscribe if you want to see more videos like this. Thanks a million again and cheers. Goodbye.